In terms of what determines the majority of your return, and therefore your risk, it is the asset class. So we'll talk about later on the specifics of the Christian Super investment options, but the important thing to take from this study, which was the Brinson Hood Beebower study, is that 94% of your return comes from the asset class alone. So which asset class you are in. Are you in shares, property, cash? 94% of your return is based on, derived from, what asset class you are in. Only 4% comes from the security selection, so picking the right stock, picking the right investment within those asset classes, and only 2% of it comes from market timing. It's very difficult for professionals achieve these results, so achieve outperformance from market timing and stock selection. And so the most important thing for us to consider is what asset class are we invested in. The other thing to note is that diversification reduces risk. It's the closest thing to a free lunch, because you're able to invest in a broader range of assets and get the same level of return, but because you're investing in a range of assets, you're taking a lot less risk for the same level of return. And that's where the beauty of diversification and investing through superannuation, where you're investing with others, can actually achieve that, because you're able to then invest in a broader range of assets than if you invested by yourself. So the goal of diversification is to reduce the risk without sacrificing any expected return, and it's maximizing the return for any given level of theory, called modern portfolio theory, which means that you take the least amount of risk that you can to achieve the level of return that you want, and importantly, to diversify across asset classes, sectors, and then internationally as well.